is ripping.
Tummy hurts.
Pretty good, right now. Hey guys, what's going on? Nick with Off the Chart Trading. I'll be doing tonight's video for Thursday, the 10th of, I was going to say February, but March. I was not actually in the room for 80% of the day. I don't think I actually ended up joining the room until about 2 o'clock. My wife wasn't feeling too well, so I ended up taking care of her. And obviously we have our 1-year-old, so when she's not feeling too well, obviously need to help her with that. So I wasn't really that active, and I didn't take any trades today, but I figured we could look at the indexes, look at the internals, kind of look at it, I guess, fresh pair of eyes too, because I didn't really even turn on my system today. When I was in the room, I was just basically managing everything from my phone and keeping an eye on some other stuff. But let's just dive right in. So, I mean, pretty solid day from the lows. You can see that that we ended up coming back about halfway, undoing about half of that move. And I think that was happening pre-market, if I'm not mistaken, because initially there was a little pop. I mean, we were already down to begin with. I think the whole ceasefire and potential talks. So this is what, round 3 or 4 of talks with Ukraine and Russia kind of fell through. Markets were sensitive to that. I think we were down 60 something points or so, give or take, at the lows. Then we got the CPI data. Not good, but not, I guess, as bad. And the initial reaction was fairly positive, because I think we did jump about 12, 15 points. I was on my way to my son's school, so I was kind of like, eyeballing it as I was at a red light, just seeing. And sure enough, we ended up having a decent move up. But then as I checked after I dropped them off, we were coming back down a bit. So, and then we opened up pretty weak. And then probably about halfway through the day, we ended up seeing some buying, and it was sustained buying, which is pretty strong. And we basically went out at the highs of the day on almost everything. So that's pretty strong, because I guess MO of this market's been, when you have these big rallies, you typically sell into them. Like if you bought puts yesterday, and it's almost like playing the extremes. Like if we had a crazy short day today, and the S&P or ES is down 2.5%, you buy calls. Chances are you play these bounces between the extremes, and it's just the volatile market we're in. You normally would do all right, and sure enough, that would have paid out, because we basically retreated about half of this candle. It didn't finish green on the day, but quite the reversal. I don't know exactly where we ended up, but last I checked, right when I walked away around 4:15 or whatever, I think we were only down 17 points. So you say only, but that's from being down 60, maybe 65, whatever it was at the lows. That's a pretty good reversal. So we'll have to see how this plays out. And I think the weekly and the monthly kind of show that there's definitely some buyers, whether it's legitimate buying, or just people short this, take profits, short this, take profits, or a mix of both. There are people stepping up to buy, but it really doesn't matter if it happens every couple days if we're ultimately seeing new lows. You would think maybe this week or next we could potentially retest these lows. It was looking like we were going to potentially do that today, if that selling continued. But still in a downtrend, still not looking too hot. If next week we have a candle that's above this, we'll say above 4,300 in closing, I would look at that as a potential, almost like a Wolverine pattern, and look for some type of potential, maybe test of the 8 EMA at least, or the 21 or the 34 on the weekly. Monthly still trending down as well. So we're kind of in no man's land, because as I talked about before, you can make a case on why we could potentially go lower, slowing down of the economy, the Fed getting too aggressive, fears of World War III, Ukraine, whatever else the case may be. And, there's definitely arguments for that. So then, then 4,000 or 3,800 or 3,600 in the S&P, is reasonable. If all these things play out and they progressively get more serious over the next 6 months to a year, that is a possibility. And then you say, well, the whole, Ukraine conflict realistically might wrap up in the next couple weeks, couple months at the most. So that's kind of ends up being in the rearview mirror. And then we end up, getting the Fed increase next week, and it's only 0.25. Maybe they're a little dovish, saying this last data read wasn't as bad as we thought it would be. So potentially we end up, being a little more relaxed with the rate, whatever the wordage is that will potentially be, dissected. And if it even remotely swings dovish, if the whole Ukraine thing seems to slow down or not escalate, and you add a somewhat dovish Fed, I wouldn't see why we don't get back up to like 4,500 or 4,600. I don't know if we're going to get up to 4,800 or retest these highs anytime soon. If we were to do that, I agree with a lot of people that it probably wouldn't be till the end of the year, going into the second half, that maybe if everything kind of lines up and it's not as bad as it looks, then, it is on the table for us to at least get back up to 4,800, maybe even, attempt, 5,000 on the S&P. We'll just have to obviously play it one day at a time. Take a look at the NQ. Obviously, it's going to be a very similar pattern. It's definitely getting hit harder. I don't know as of today, but was it roughly 16-17% it's down versus the S&P being down about 11% from the high. So definitely getting hit a little harder, but very similar idea where it came about halfway, came back up. So nothing too crazy there, or at least nothing new to report. Take a look at my Russell. How's that squeeze looking? It's basically, where is that? I can't even see it. Enhance. Okay, so it went red, then hooking back up. So at least there's that. Momentum is shifting higher over the last 3 days. If anything, I think the Russell looks probably one of the better ones. And you can see that it's almost like it's broken that downtrend. I mean, it's still in one, I would say. But the fact that you can almost draw a base, right around here, 19, we'll say like 1955, 1958, somewhere in there, that every time it's breached that, it's held. So it had its initial flush, and once again, it was kind of early. We talked about that in last video. That was early by about a month and a half. So it might be a month and a half sooner that it starts creeping up. So I would definitely keep an eye on the Russell. If you ultimately think we do end up heading higher, maybe buying IWM calls a few months out might be the best way to play it. I think the risk rewards, especially in the S&P or the small cap stuff, the IWM, I think the path of least resistance higher. Now, obviously, if everything I just talked about a few minutes ago plays out to the downside or negatively, then obviously this breaks well below 2,000, goes to, 19 below 1950, gets down to 1900, maybe even 1800 or lower. So once again, you can kind of make an argument for both sides. But one thing, it did break down to its 34, but you can see over the last 3 months, it has found support at that. And even though it breached it last month, I still consider that support because it ended up not only bouncing back up above the 34, but actually closed above the 21. So as far as finding levels and actually finding somewhat of footing in this market, I think the Russell and, specifically small caps look the best. But that's also because they've been getting beat down longer. So like I mentioned that before, typically it leads us down, the small caps, and more likely will be the one to lead us up. Take a look at the Dow. Like I said, we talked about that squeeze firing short. Similar pattern, but, look, just mentally, or by all means, rewind the video a little bit. You can kind of see that this is still in a downtrend where the Russell for the 3 months, those three candles are basically finding support. In that example, it was the orangish line, which is the 34, but you get 3 candles that are basically trading sideways, which is basically finding a base, foundation, whatever words you want to use. But then you look at some of these other charts, basically the other 3 indexes, and they don't look like that. They still look like they are in a pretty significant downtrend, even though, like I said, buyers do step up or short covering, whatever caused those initial spikes. But it doesn't mean much if you have an amazing day if the next 2 or the next day it's taken down and then you end up getting new lows and then it tries rebounding and you get even new lows. So that symmetry and that stair stepping lower is in effect. So we'll just have to see how all this plays out. Look at the internal screen. Like I said, there was that initial, actually right at the, was it up at the bell? Yeah, so there's an initial pop. I mean, there was a good amount of buying coming in, that lasted about 30 minutes for that first opening, drive, then ended up coming back down. And, you would think if you took out these lows that it would potentially set the tone to potentially go lower for the rest of the day. But quite the opposite happened. We actually found some support down here, came up, came back down, and then it was off to the races basically from a little after 1 o'clock straight up. So that was pretty strong, especially in these markets where sometimes they open strong and then finish weak. To actually be able to go out somewhat near the highs, I think is a good sign overall. Relative strength. And it doesn't necessarily have to be a plus 1,000 point move on the Dow. It could be it could finish up 50 points or 100 points. It's just the fact when it looks like it could get progressively worse and it doesn't go any lower, and we're seeing certain levels, mainly like in the ES, that 4,200 to 43 level. We're there for about a week or so now, even though we've tested lower and then come back up. If these areas, the longer we trade within them, I think the more bullish that is. Doesn't mean we can't consolidate and break lower, but I'm just saying if I was short and normally the whole, take the elevator down, escalator up, or really the stairs up, if you don't see that momentum continue and you're slowly bleeding out because you do end up seeing the indexes move higher, more likely, you're going to end up covering quicker than normally, you would see a move upward where you're a little more patient. So we'll just have to see how that all plays out. VIX has been kind of all over the place, but that's another thing. When you have the VIX, what is this, the 7th, 8th day in a row that it's above 30, it is, once again, there's no true level of, extreme overbought or oversold scenarios, depending on, everyone has an indicator, everyone has a line, everyone has a certain way of determining that, but there's no, rule. And as far as, it's my RSI, it's my MACD, it's my whoopty-whoopty, whatever it is. But the fact that we are above 30 on the VIX is an extreme level of fear, uncertainty, FUD, whatever you want to call it. And chances are during these times, especially more days into it, like on the 4th, 5th, 6th, 7th day, nibbling at stocks you like, I think will ultimately reward you in the future. Just obviously have to be aware that it could, the future doesn't mean in 20 minutes, it could be in 20 weeks. So just have that mindset if you are looking. One thing that caught my attention, which I'm not too happy about, is the 10-year is creeping back up. It did end up closing above 2% here. So that is definitely something to keep an eye on. I figure with all the uncertainty and stuff, we would actually come back down a bit. I mean, we got below 17, which is the equivalent of 1.7 on the 10-year. I'm like, all right, great. Mainly for me personally, since I'm in the process of selling our house, I figured the lower it went, the better it would be for interest rates. I think interest rates got as high as like 4.28 today or something with this increase. So personally, obviously, that does play a big factor, especially if you're looking for, to spend a lot more money, that extra percent from what it would have been a few months ago to what it is now. People's buying power, I don't want to say it's cut in half, but by like 30, 40%. So if they might have been able to afford a $900,000 house, 5 months ago, they might only be able to afford a $700,000 house. So, obviously the more people that want it, the better. So that's definitely something to keep an eye on, especially if you guys are personally looking to sell your house. That's not the only way of gauging it, but definitely one of the better ways, saying that if the higher it goes, the worse it is for mortgage rates, and then vice versa. If it drops, the better it overall is. Fantastic declines were fairly weak today. Put call is getting a little back up there at 0.85, something to keep an eye on. Gold kind of just stagnant, trading sideways. Oil ended up dropping fairly nicely. I think going out at like 105 and change. So if you guys watched Tuesday's video, I think oil was at 125 or 124 when I did that video, and I mentioned the short on Chevron, so it would actually worked out better. We can switch screens. Dollar dropped yesterday, came back a bit. I'm just eyeballing this stuff real quick if there's anything else on this screen I wanted to talk about, and I don't see anything. So let us go back to this screen and we'll look at Chevron. I was still red ultimately on it, so I wasn't able to get out. And oddly enough, it was actually up like $4 and change today. Like I said, that incredible move higher just straight up over the last couple weeks, and like I said, definitely more aggressive on the monthly and on the weekly chart. But Chevron, I mean, if I looked at a lower time frame, it actually had a fairly decent drop from its highs. But funny enough, it actually hit more all-time highs today, which was a bit of a head scratcher for me, since oil, they have a buyback and all these other things, but I didn't think it would continue up. So, but if you watched Tuesday's video and your first move yesterday was to go short anything oil, then it ended up paying out. And ultimately, my thing was not to do it over a longer period of time. I'm not looking for a downtrend. I'm not looking for it to hit here and then go down and come all the way back down. It was honestly a move like yesterday where you get up, to like 170 or whatever, and then you end up, dropping back down to like, basically a $10 move lower. Something equivalent is what I was looking for. Unfortunately, I went short somewhere over here, and as it goes all the way up to 170, you need a much bigger move, especially with options. Especially if it's directional like it is for me, puts, I think I had the 140s for May. So I got plenty of time, but it sucks when you do end up seeing a decent move down and you really can't reap the benefit of it. But as I always say, you can be right and still lose money. So maybe some of you are able to capitalize on that idea. Like I said, oil is not something I really typically talk about, but when something goes from being in the 70s and 80s and 90s and shooting up to 130 relatively quick over a week, definitely something to pay attention to. I did mention on Sunday, the night that this happened, that it hit 130. It felt like a blow off top, and so far that has been confirmed over the last almost week now. That 130.50 has not been touched. Like, we opened, we shot up 7, seemed to be like really extreme, and we traded sideways to down, and then here we are. So I'm not saying it can't hook and go higher and hit 140, 150. It's ultimately going to depend on this, where are we getting our oil from? Or, X, Y, and Z drilling more? Are they opening up this? More permits, more areas, more this? Are we giving some to these people? Or is so-and-so going to make another deal with whatever? There's so many moving pieces when it comes that will dictate the price of oil. It's very hard to base off charts, because if news comes out while I'm doing this video about, Russia completely shutting off, it's blah, blah, blah to Europe, then this thing might shoot up to 120 like this. So there's nothing you can really chart about that, because it's, trading on news, which is kind of what the overall market's doing right now. But nevertheless, I was looking for a move back down. We did see it was super aggressive the other day. This was technically on Wednesday. So I got what I was looking for, a massive move down in oil, and obviously it didn't really pay me. But I did that video on Tuesday, and if you didn't do anything short on oil the following day on Wednesday, hopefully it did end up paying you. What was I going to say? One thing, not that it's something I personally cover, but since I am really big into EVs and all things, future tech and whatnot, I figured I would mention Rivian just in case it's not something maybe you follow on the regular. But I forgot, somebody in the room asked me about if it was a good price right around the IPO, and it was passing around $100. I'm like, honestly, I would wait, because these valuations, I'm not a big valuation person, but just because I'm not a big valuation person doesn't mean the overall market isn't. So when you hear 120 billion, they at that time I think sold like 100 something cars, trucks, whatever, to be worth 120 billion. It's just kind of extreme, because that was worth more than some of the legacy companies combined. So once it started getting crazy, I'm like, you can trade this, but I definitely want to be buying for long term. And sure enough, here we are hitting all-time lows after hours, after a disappointing quarter, which honestly, even with Lucent, like, I'm not expecting anything crazy. Honestly, from the numbers, I think they sold almost 1,000 cars last year. And obviously they've only been public a little while. So the last quarter, they ended up selling 1,000 vehicles. I think they're slated to make like 25,000. They ultimately thought they could do 50,000, but because the supply chain, they're not able to. So, I mean, it's a real company and it's got some big backers. Like I said, I think Ford owns 10%, something like that. I think Amazon owns a good amount. Also, they have that massive order of like 10,000 vehicles, or more. That was like 100,000 vehicles, or whatever the case may be. So that's not obviously all at once, but when you have guaranteed customers and a couple very expensive and rich companies being able to handle throwing money at it, it does that has to be factored into the valuation. So at $35 and change after hours, am I going to buy it tomorrow? Probably not. But I would say if it does end up getting down to the mid 20s, low 20s, I think, even at this price, if you plan on holding Rivian, if you think EVs are the future, and some of these companies don't have to make, going from ICE cars to EVs, that transition of completely changing your plants and to completely make all these swaps, these companies are hitting the ground running, and they don't have to worry about a legacy business. This is their only business. So there is no transition. There is no growing pains for them in the sense of having to convert from gas power to electric. So I think that some of these companies might, even though these other companies might have more money and they can invest X amount of money, I think they have a head start over some of the other companies. Not that they're not making EVs, but for Ford, I think it was 3% of their overall sales, or 3% of all the vehicles they made or something. So, where this is 100%. And obviously, for whatever reason, EV cars, I guess because of future growth, are valued a lot higher. And somebody made a comment about if Ford came out today and said they were no longer making gas powered cars and they were strictly electric, the stock would probably double. And obviously, that'd be horrible for their business, because they only 90 97% or whatever it is all gas powered, so it'd be shooting themselves in the foot. But just because of how this stuff trades, it would be on paper worth more for whatever reason. I guess once again, future growth. But I just wanted to bring this one up since, like I said, from $180 to 35. I mean, what is that? Over 80% drop. For me, this starts becoming a lot more lucrative. But in this market, you have to be aware that 35 might be a steal. Tell your kids about it in 10 years that, I was smart enough and I pushed against the downtrend and I bought at 35 and wow, that was amazing. Tell us about how you bought it and now it's a $500-$700 stock, whatever the case may be. So it's tough to focus on the future when you're looking at it every day and it slowly bleeds out, especially if you bought this at $50 thinking you were getting a steal, or I bought it under the IPO price, man, that was a great buy, and then now you're cut in half and then some. So anyway, my point is, if you like EVs, Lucid's fairly inexpensive here, I think at $23-$24. This one's at $35. So if you have a longer term outlook, once again, longer term, not a couple weeks, not a couple months, like you're talking years, I think at these prices, both of them and a lot of these other ones, the charging companies and stuff, being down 50, 60, 70, 80%, if you have a longer term idea and a longer term account, I think some of these are definitely worth either nibbling or at least keeping an eye on. But keep in mind, and I tell people in the room this, yes, it's down today, and yes, it's down maybe next week, and it could be down by the end of the month, but there will be a day that kind of lights the fuse, and that is the bottom, and some of these stocks are going to be up 20, 30, 40% in a couple days instantly, and then by then you feel like you're chasing. So find a price you like, be comfortable having a starter position, not going all in. Let's just say you want 100 shares of Rivian. Maybe buy 25 or 30 tomorrow. And then you go from there. And if it drops down to 30, great. You're lowering your average. It drops down to 20, even better. Then you maybe have an average of, the high 20s. And over 5 years, 10 years, I don't see this company going out of business. So you're probably buying it at a good fair value. So just something to keep in mind. Once again, hashtag not financial advice. Not a financial advisor, but I'm just letting you guys know what I would personally do and what I'm potentially looking at doing. But for me, it has to come down a little more. And in this market, like I said years ago, this would be an amazing steal because most stocks don't drop this much from recent highs. Like if this was a trend over 20 years, 10 years, maybe, but this type of price action in a very short period of time, I've never seen anything like it. So whether it's a sign of the markets not being very... forward looking in the sense of maybe the returns going forward aren't going to be what they've been over the last few decades. That's a possibility. If that happens, then obviously no one has a crystal ball. But, just from sheer price and where it was and where it's at right now, I personally think 5-10 years from now, buying Rivian at 35 and buying some of these other companies, I think will be, you'll be okay over the next few years. But anyway, I'm going to end it on that. As always, check us out at offthecharttrading.com. You guys have a wonderful night and take care.